Thanks everyone for coming along. I think we probably would have liked to see a few more here, but they're going to miss out on some good stories. I'm a bull, and we've got a lot of excitement ahead, I think, for the next decade. I've been in these markets for, I have to say, 40 years, seen lots of ups and downs. I've never been more excited than where we are today. And what's happening is quite extraordinary. And my mantra is heed the markets and not the commentators. Sorry, David. What are the markets telling me? How do I interpret them? And what are they really telling us? And they're telling a very exciting story. First of all, we're going to talk about gold. You all want to hear maybe where the gold price is going. And those who've been reading my Dawes points, who subscribes to Dawes points? Very lucky people. Anyway, I've been writing it for about 6 years, and I haven't had to change my views through any of it, and it's all coming to pass. So the most important thing when we look at gold is that gold is different. There's only 185,000 tonnes of it above ground. It's a matter of who owns it, and also who doesn't own it. So if we look at who owns it, of that 185,000 tonnes, about half of it's jewellery, and half of that is in India. Probably 25% in China, and the rest is all around the rest of the world. But the thing about that sort of jewellery, it's investment jewellery in those countries, is that it gets held onto and doesn't come out, so it's really tight. And when we look over the past 6 or 7 years, we've seen a lot of gold go from the West. There's about 3,300 tonnes of gold produced every year. About 400 of that is from China, about 180 is from Russia. So you take that away, and we've got about 2,700 tonnes that's produced in the West, and we're sending about 2,000 tonnes a year to the East, which basically means, by definition, net, we're running down inventory in the West. So Asia's rising and it's owning gold. The West is longer term declining for all sorts of reasons, its debt position, and it's generally short gold. So what we find is that when the gold price comes back, when it's weak, the Asians are buying. When the gold price is moving, the West is buying, and so they don't want to miss out. But so what we've got is who owns the gold and where is it going? So I think that's going to be the driving force for the next decade, and we'll just end up with a very, very tight market. And because there's short positions in the West, I think we're going to see that driving the gold price much higher. Currency debasement is the fundamental for the direction of gold, and that's why Asia owns so much gold. If you look at Asia, I don't think you can find a currency outside of Hong Kong that's more than about 30 years old. People know what happens. And then we've got the bond market, grotesque, about $100 trillion, the biggest concentration of capital in man's history, and most of it will never be repaid. Negative yields, in my view, is baloney. It's a scam. It's just the end of 40 years of bull market in bonds, and this is the way it's ending. Now, we've got a strong US dollar. I'm a bull on gold, and I'm bullish on the US dollar. You think I'm crazy? And I'm also bullish on the equity markets. And why? Because the economies look so strong to me. Now, having said all that, you've got the commentariat wanting to have more QE and being concerned, but unfortunately, they're not the people at the end of the day who make the decisions. So if we look at the gold price, we've been in a long-term bull market since August 1971, when Nixon closed the gold window and we had the abandonment of the Bretton Woods Agreement. But we had the run-up to $887 in January of 1980, and then we had a 20-year bear market, pulled back and bottomed over the period 1999 to 2001, and we've really had quite a strong bull market into 2011, and we've had a number of years of correction. Now we're on our way up. This is really quite fascinating. This uptrend here, I think, grew at about 17% per annum, and this one here looks as if it's growing almost 20% per annum if you look at the surges. So I think we're going to see quite a strong gold price as we go through. This is really only just the start. Now, if we look at the short term, we had a massive base under 1360, and 6 years it took the market to get through here. We've broken out nicely. I think we might pull back to about 1450. I don't know, but that's my sort of best guess. But we're going to see much, much higher gold prices. And longer term, we're going to see very, very high gold prices over the next 10 years. Now, bond markets. Now, those who follow the bond yields carefully would know that bond yields bottomed in 1942 and rose for the next 39 years. And they peaked in 1981. And since then, and you can see that is now 39 years of declining interest rates and declining yields. But as far as I can see, this is just absurd to have a 30-year bond with 2%. It just doesn't take into account the risks associated with the issuers. Would you buy any of you here want to buy a 30-year treasury from the United States with the Democrat Congress and the fact that they've got all that other debt behind them? It just doesn't make sense. And when you look at Europe, which in my opinion is a basket case, and you've got negative yields, who's going to lend money to these people? Because as that famous American comedian Mark Twain, or not comedian, commentator said, it's a matter of the return of your money, not the return on your money. So I think it's going to be a matter of getting your money back from some of these things. It just doesn't make sense. So the US dollar is continuing to rise. I've been quite agnostic on the future of the US dollar, but it certainly suggests to me that it wants to go higher. And it's really interesting. You can be very negative about the world outlook and say, yes, well, everything's really coming to the US dollar as the core currency. But I think there's something else that's underway there that makes it a lot more positive and a lot more interesting. Now, the euro, you can't have a weak US dollar if the euro is even weaker, because the euro makes up about 57% of the US dollar index. I think we're going to see the euro, which is broken through 110, it's going to come down here. And I think they've got some real problems in the euro because the UK is the second biggest economy there, and if it leaves, it's going to leave a big hole, and you're going to say, well, why does it have the thing at all? So it's very significant. Now, equities are strong. I'm a bull on equities, and I think we're going to see a very strong move over the next 6 months in US equities. So many people are talking about a crash in the equity market. I just can't see it. I just cannot see it when I look at the individual stocks and the individual subsectors. If you look at housing in the US, it looks as if it's booming to me, and the housing is really going to drive the American economy. And I just think it's a very exciting outlook. So, gold price. Now, we've had new highs in 75 or over 75 currencies. David showed the number gold price in SDRs. But what's more important technically is that 2011 downtrend has been broken in all currencies. The yen was the last one to have that downtrend broken, and that happened a few months ago. So I expect to see a good price in gold, about $3,000 by 2021. It could be earlier, but I don't know. And it's going to be much higher further out. Now, we've got gold production declines for many of the major mines around the world, and there's a possibility that we'll see gold production globally decline. I'm really quite concerned about China. Even though they've said that they're going to go from 400 to 500 tonnes, I can't see it, and I'm not seeing it. I think Australia might actually pass them on the way up as they go down. So we've got a slight decline in availability of gold, but that needs to be put against the 185,000 tonnes that's up there. So central banks are buying gold again, so they're adding to the tightness in gold. We've got Asia buying, and we're going to say, well, hey, where's all the gold going to come from? And as I mentioned before, if the West has sold a lot of its gold, it's in a short position, what can happen to the gold price could be quite sharp and quite strong. The problem will be government debt, and inflation, I think, is likely to re-emerge in all sorts of places. Now, gold in $8, we're very fortunate to see 2,300 recently, which means that the existing producers are making a lot of money. It's really pleasing to see that. We've never seen this before, where mining companies have got so much money and they've been forced to pay dividends, and they can't spend the money on the assets that are out there. Exploration's picking up, and we're seeing some extraordinary stuff happening everywhere. I think Liam mentioned Anglo-Australian with that really interesting discovery. The Staveley thing is really, really interesting, but hey, there's a massive amount of exploration underway in Eastern Australia at the moment, in Victoria, New South Wales. I was at the Mines and Wines Conference down in Wagga there with Wally for Thursday and Friday, and what's going on in New South Wales is just so exciting. It's just brilliant. So high in a good price for the Australian gold industry is great. So our gold index has exceeded the 2011 high, so we can expect at least 10-year bull market in these stocks. The big stocks are going to be further re-rated because they're paying dividends. They're going to be seen as a yield play, and you're going to get growth in those dividends as we go. Gold production in Australia is at record highs. We're doing about 330 tonnes at the moment, and we should get up to about 350, I think, by the end of next year. Exploration activity in gold has almost matched the previous numbers. I was looking for the numbers in your quarterly, but it's not on the internet yet, unfortunately. I couldn't find it there while we were talking to update the numbers, but we've got a lot of new regional activity. The mines departments and geological surveys in all the states are committed to trying to get a better understanding of what's happening undercover. Almost 70% of Australia is under recent or other cover, and we've got things like the AusLAMP program, which is magnetotellurics, which probably means nothing to 99% of you, but we're really looking at conductivity targets under the cover right throughout the country, and it's getting very, very exciting. So expect some big discoveries with all this as we go through. I mean, look at Fosterville, that's just come recently. And but the small emerging companies are going to thrive, and we're seeing the return of the IPO. I've done about 35 IPOs. I've done 2 since 2007, and neither of those were in the resource sector. I'm doing my first one now. Just shows you how difficult it's been, but I've got the confidence that we're going to move on. So the gold index has gone to a new high. It's taken out the 8,499 from April 2011, and it's pulled back a bit there, but what I'm really interested in is the rate of growth here and here. It exceeds the angle that we had in the earlier thing, so I just expect that this is going to be a real boom. So gold production in Australia, we had a fabulous performance after the gold price run in 1980, and we had the 82 recession and so on, but we're doing less than 20 tonnes, and we got up to 250 tonnes by before 1990. I mean, an amazing performance by the Australian gold industry, and I expect to see something else come through here. From 2000 to 2008, gold production fell really quite sharply, and in Western Australia it fell 48%. But now I do think that we're going to continue to grow, and what I'm seeing coming through might mean that we actually reach position number 1 as China declines, assuming China does decline. I think it will. Now, in terms of looking at this, we had a peak quarterly rate of 318 tonnes in 1997, we did 312 tonnes in that year. We got 330 tonnes in here when we're doing 321 at the moment. But I'll wait for your numbers, David, and we'll see what the update is in terms of that. And you can see how WA fell 48% during that period and has staged quite a strong move. Our exploration has reached almost $1 billion annualised in the gold sector, so it declined very, very sharply after 2011, but we've gone to new highs. And if we work on the basis of maybe $50 an ounce, and many companies are finding it sub $10 an ounce, we're going to find a lot more gold, and we're going to find a lot that'll come into production. The last bull market was pretty exciting. And it went up. We didn't have a gold index, I think, until about 2004. The ASX sold all its indices to S&P, and S&P has provided us with rubbish. It really is rubbish. Can I say that again? S&P has provided us rubbish indices right throughout the resource sector. But this market went from 100 to 8,499 in 2011, so it was up 750% over that period of 11 years. I think on a like basis, we're going to do much better this time because, one, gold production is much higher than it was in 2011, and we've got real companies in the index now, not 52 iron ore and coal companies and uranium companies in the gold index. Bless their little hearts. So the gold sector earnings are going to keep rising. Sure, some have pulled back as they sort of need to reflect changes in operations and so on. But we're going to get rising dividend payments. And as I said, we've never had this level of cash in any sector in Australia, mining sector in my experience. And this is providing some unusual, but fascinating developments. So corporate activities warming up. We're seeing takeovers, and we're going to see a lot more of that and consolidation. We're going to see our resource continuing to grow as a result of all that exploration. And the exploration results, as I say, are extremely encouraging. We're going to see a lot of activity in Victoria, a lot in New South Wales. And did everyone note Al Kane's porphyry copper announcement a couple of weeks ago? That's really significant, and I think we're going to find a great rush for porphyry coppers in New South Wales, so make sure you're watching that as a subsector. As I said, the work that the Mines Department has been doing, and there's a fellow named Ross Cayley out of the Victorian Geological Survey. I mean, what a genius, putting together some absolutely amazing things to feel absolutely delighted about. And small stocks are going to have their day. So what we're finding is that the market share of the XGD of all ordinaries, it's exceeding 6% again. We had 6% in September, and it basically shows that it's going to become quite a dominant sector of the market for the next decade. I think these are really, really interesting and very, very valuable graphics. Gold stocks against the 8-hour gold price. Historically, we saw 7 times in 2007 to 2008. The gold index was trading at 7 times the gold price with a crappy index or crappy stocks. And here we're only sort of 3.2. I think we'll probably get up to about 5 times the gold price. So the gold price will be rising and the gold index will be rising even faster. Now, across in North America, Australia's really been leading this whole thing. It's been leading this reflation around the world, and the North American stocks are only just starting. This 2011 downtrend was very, very important. The Philadelphia Gold Index only broke that just earlier this year. They're so far behind us, but they're moving along nicely. And if we look at these stocks against gold, in the short term, we've broken this downtrend. To me, that's very important. In the longer term, we're really at a very, very significant discount to the long-term positioning. The Canadian TSX-V, which is where most of the stuff is happening. It's turning. It's been absolutely miserable and horrible, and that's been very important in terms of the sentiment of gold index around the world. But that's been moribund, but it does appear to be turning and action underway. Now, this is the $8 US dollar rate against the Philadelphia Gold Index. And for 13 years, from 1993 until 2013, R squared was 0.92. So an extraordinary correlation. So whatever's happening in the $8 is happening in gold stocks. And what's happening in gold stocks is going to be a driver for where the gold price is going. Now, the other thing we've got to think about, again, Liam mentioned that the ETFs were sort of taking up a lot of the money, and people are sitting on the sidelines and so on. Australia's got $1,580 billion of bank deposits. That's savings accounts and building societies and term deposits. People are just scared. They're not willing to come into the market. They think the end of the world's going to come. They think the stock market's going to crash. They think China's going to fall over. All sorts of horrible things are going to happen. And they've been saying that really for the last 10 years, and it hasn't happened. And there will be this realization soon that it ain't going to be like that, but it's going to be really quite the opposite. So the gold sector, we're going to see earnings keep rising, dividend payments increasing, our cash levels are growing, corporate activity warming up, and small stocks are going to have their day. And here we are. We are here. We've been through disbelief, pessimism, hope, despair. We're on optimism. We've broken above the 2008 and 2011 levels in many commodities. Iron ore is going to new highs as India comes in. India is now the second largest producer of crude steel. It's just pipped Japan. They want to go from 110 million tonnes, 112 million tonnes at the moment, to 300 million tonnes by 2030. They're not going to do it, but they've just become an importer. And where are they going to get the iron ore from? Well, they've got to develop Africa. So that's going to be very good for the continent of Africa. 1,400 million people, and their stock markets are all-time highs and looking pretty good. Doesn't matter whether we look at copper, nickel, and those battery metals, iron ore, LNG, we're all looking at a very, very strong market, and that's where we are. And enjoy it.
Thanks, Barry. Thank you. That's a great upbeat presentation from someone that's known in the markets as Barry the Bull. Very, very bullish and very positive, and rightly so. But we've got time for a question. Is there a question before we break for morning tea? A question from the audience to either David or Barry? I guess I'm just not sure, Barry, in terms of where the exploration, we're seeing exploration expenditure increase, but most of the exploration expenditure is around the head frame. There isn't too much sort of grassroots exploration in the market. And in terms of the IPO, I mean, that's the key barometer for health, isn't it? You know, and the appetite for risk, if you see IPOs take off. We used to have 30 a year in the market in the good old days, but I think this year we may have had 2. Good luck with your IPO. But what are you seeing? Are you seeing a retail investor interest come back?
Look, it's not there yet, but I think it's likely to come soon. I do think that people are concerned about house values, and you've seen that the clearance rates at the auctions have been extremely high. So I think the confidence is coming back. Interest rates are overdone on the downside as far as I can see, and they probably won't rebound for a little while, but essentially I think that really affects people's confidence. And I see this all as confidence and sentiment, and with so much cash on the sidelines, and if the house is safe, we're not going to go down the gurgler, I think it's going to come back. And and the active fund managers have got to come back. But what's really interesting is that there's so many stocks to cover, and there's so many interesting areas. The battery metals, the lithium side is really overdone on the downside. That's going to pick up. I mean, I don't believe in global warming. I think it's just bullshit. It's just a hoax. I've done all the work on it, but it's a hoax. So the long term of electric vehicles, to me, is badly positioned. But having said all that, we're going to need the nickel, and we're going to need the copper, and we don't have enough copper mines to come on stream. But everywhere you look, there's just opportunities, and whether it's going to be this high purity alumina coming through, or the rare earths are going to have another surge. And we've got to remember too that so many commodities are high performance materials, and they demand a premium in the marketplace. And these things are hard to find, but once you've established an operation, that they can be very, very profitable in the long term. Australia really can only produce the raw materials because it doesn't have a big enough market to get into complex manufactures and even complex metals. But the opportunity at exploration is just wonderful.
Thanks, from a true seller of hope. Thanks, Barry. Ladies and gentlemen, we've been blessed with two fabulous opening addresses this morning, which I think have set the tone for today and for tomorrow. So please put your hands together for Barry and David. Thank you.